Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW at 24 traders, and our website is www.stochastic-mardi.com, www.dayprotraders.com, www.24elliottwaves.com. Alright, the title of the video is how to achieve consistently winning trade, part 4. How to achieve consistently winning trade, part 4. Alright. In this video, we're going to use the language of the price action. What do I mean by that? Okay, we want to analyze the price to detect the best trade setup in order to achieve consistently winning trade. In order to achieve consistent winning trade, one must understand the language of the price actions. Alright, I'm going to simplify it. I will not use the Elliott wave pattern or Fibonacci pattern or fractal pattern in this video. I want to concentrate on the simple definition of uptrend. In an uptrend, the price must display higher lows and higher highs. Very important, okay? So with that, we can play a little bit with it, okay, deduct from it, okay, to achieve consistent winning trade. Price must display higher lows, higher high in an uptrend, okay? So here we are, the price display a low, okay, all right, and went up to display a higher high compared to this high here, where my cursor is, and the price display a higher low. This point here, this is an invitation to buy. I'm going to put a vertical line there. Okay, I'll call that vertical line in green. Invitation to buy at the green vertical line, okay? We responded to the invitation, all right? We use a top-down trading method. We check the economy news. We use, okay, multiple time frame trading method, very important. We analyze the risk. We want to buy. We want to make sure we draw one line. Is it support level? Yes, it is. Great stuff. We responded. We enter the trade here. Okay? Price goes up. We are in the uptrend. The price must display a new higher high. Okay, so the previous high, the price must find a support above the previous high. This is what it meant. So, so from here, okay, I don't want to go to waste my time talking about everything else, minimum target, okay, the media line of the rising channel. I don't want to talk about that now. So here you can see that as the price started going up here, it did not display a significant new high. It did not, okay. See the only one candle here, okay, before it came back here, okay. All right, okay. So what I want you to understand is that if the price, we have an invitation to buy, and the price went up and failed to go above the previous high, or the price failed to display a new higher high after we purchased it here, this is a sell signal. Why? Because it's an uptrend. It must display a new higher high. But if it failed to display a new higher high, it's the opposite signal. We will consider this zone as a resistance zone, and we can look for opportunity to sell here. It's a little bit messy, as you can see, but finally the price went down. Okay? All right? So if the price displays a high, a higher low, but failed to display a new higher high, is a bearish trade setup. We can use that to achieve a consistent winning trade. Was a messy, but finally the price went down because we are just analyzing the price, paying attention to the language of the price itself. Okay? Let's check this one out. You see here, this is a better example here. So there was this low, followed by a higher low, yes, and the price display a higher high. Price display higher high. Okay, great stuff. The bullish momentum is intact because nothing has changed. It was displaying higher lows and higher high. Here we have a higher low, but this time the price failed to display a new higher high, failed to go above the previous high, because in normal condition we prefer it to go above the previous high and to pull back, to retest it, and find the support, okay, and to continue to go up. But if the price, you can see this is a bearish trade setup here, because why? The price failed to display a new higher high. With this information, we can achieve consistent winning trade, consistent day trading trade, consistent winning day trade, consistent winning swing trade. It has failed to display a new high high. It's a bearish trade setup. We'll use again a top-down trading method to enter the trade, and we will check the economy news. It makes sense? It is also powerful. You see here? It's a bearish trade setup. Top-down trading method, managing the risk carefully without violating the market patterns. Trading on the edge, break below, retest, break below the previous high, and retest here, capitulation. It makes sense? It makes sense? In a downtrend, the same thing applies. So in a downtrend, what's the definition? The price display of what? Lower lows and lower high. Okay? So there was a high followed by a lower high. So in fact, it was here. In fact, here it was a double top. Okay, double top is a bearish, okay, pattern. So there was a double top price. Okay, display a higher low here. Here you can see. If I draw another line here. It's not easy to keep this video under 5 minutes. Okay, I thought I can keep it under 5 minutes. It's not easy. So a low. So if you like, we can support first low, second low here. Okay, a low, a higher low, and the prior retest is here. This is an invitation to buy. Right here on the edge, we draw the warning line, which is the previous high. You see here, the test is here. This is a buy signal. A trading setup. This is a bullish trade setup. Okay, so price going up. You see, it failed to display a new high after displaying a higher low. What's this one here? It's a sell bearish trade setup. All right, it's a bearish trade setup. Yes or no? It failed to display new high. You may say to me, Joe, how do I know? Just draw the common center line along this one here. If you hit it and break below the common center line, game on. Use the top-down trading method, okay, to enter the trade and to manage the trade. The opposite is also true in the downtrend. If I explain to you, price going down, must display lower lows and lower highs. So if this price display, for instance, a high followed by a lower high, okay, and form a lower low. Okay? No, 1 second. Okay. So, price display high, come back down, but display a lower high. So we have a high and a lower high, okay? So we draw a bearish trend line, okay? Okay, if the price goes down, display a new lower low right here, and then pull back to the edge of the declining channel. That's a bearish trade setup. Okay, right here is a bearish trade setup. We use a top-down trading method to sell it. Now the price is going down, but this time the price did not display a new lower low. Suppose instead the price display a higher low here. What is it telling us? This is a bullish trade setup. Okay, you may say to me, John, how do I know? Draw the common center line along this move, break out, find a support here and close above it. It's a bullish trade setup because after this lower high, the price failed to display a new lower low. If you find a support here, it's a bullish trade setup. This is how we can achieve consistent winning trade by analyzing the price action, by interpreting the price action accurately in an uptrend, in a downtrend. We can achieve consistent winning trade by detecting when the price is likely to reverse or change direction due to, okay, a lack of support or a lack of resistance in a downtrend. It makes sense? It is also powerful. I hope you have learned something for this video also about how to achieve consistently winning trade, part 4. In this part, we were talking about using the language of the price. In an uptrend, the price might display higher lows, higher highs. If the price display a higher low, this is an invitation to buy in an uptrend. But as the price display a new higher high, if it fails to display a new higher high after an invitation to buy, that's a bearish trade setup. The opposite is also true in the downtrend. As the price display a lower high and we sell, if it fails to display a new lower low after a lower high, that's an invitation to buy. In each case, we use a top-down trading method to enter the trade without ignoring the economy news on the fundamental. We want to buy. We want to make sure that we are buying at a support level. So we draw the warning line. Is this a support level? Or is there a better support below? We want to sell at a resistance level. Is this a resistance zone? Or is there a better resistance above? We are selling where it is the first target. First target is the first and nearest support level. Price does not have to hit the target. We want to control every trade. We are buying. The first target is the first and nearest resistance level. We are controlling it. And we use the top-down trading method. If one is using TSCW34, one will find a setup like this. 2-hour chart, 4-hour chart, daily chart, monthly chart, weekly chart, any higher time frame, and then switch to the first best time frame, taking the signal again on the first best time frame on the edge, drawing again the channel like we did here on each time frame to make excellent decision. I hope you have learned something from the video and we put into use to make excellent decision to achieve a consistently winning trade. If you like this video, please give us the thumbs up. If you dislike it, please give us the thumbs down, but put a comment below. This will allow us to improve our recording. If you truly find it very useful, please share it on Google+, on Facebook, on Twitter, and you can even embed this video if you have a website. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about how to achieve consistently winning trade, part 4. I invite you now to follow me in the next video when we will be talking about how to achieve consistently winning trade, part 5. Speak to you soon.